Good evening, ladies and gentlemen. We are so excited that you're taking time to be here with us on a Wednesday evening. We're excited about our Wednesday evenings because we've taken on a whole new platform for Wednesday nights. Wednesday nights have turned into really an evening with the architect of the Forex stat. We're going to be going through some of the existing strategies using a very new, exciting tool that we have, a simulator that actually compresses and speeds up the process of actually looking into these strategies from the day they were opened all the way to right at the moment, the very moment that you are looking at it. And we're very excited about this new tool that we have. But before we get into that, and I have the honor and privilege to introduce our speaker this evening, I do just want to have a couple of corporate announcements. Nothing too major, only if you're one of the people that's expecting a paycheck, any type of commissions from Forex Stat. We're very excited to let you know everything is up, running, and running smoothly. However, there are people, I believe, that are owed commissions that have not taken the proper steps to make sure that their commissions can be pushed through to the new ProPay e-wallet system. So I want to make sure that you know exactly what those steps are. First and foremost, you should have received an email from corporate that would have outlined how you send in a W-9. It would have sent a W-9 platform through DocuSign to you so you could do an online signature. There will be no commissions paid until a W-9 is received from the company. It's just very important, a very important process that we have implemented. So if you have not received that and you are due commissions, please send an email to support@forexstat.com and make sure that you get that W-9 in. So you will get the email link that will assist you in setting up your ProPay e-wallet, and your commissions can be pushed to that e-wallet and you can start receiving them with ease and, most importantly, on time every time, because of the simplicity of how this system is going to be rolling out. So we're very excited to bring that to you. Of course, the other thing that is the most exciting to me is our new webinar platform. Tuesday nights we have taken out of the agenda. We will only be holding webinars on Monday and Wednesday, but I assure you, with our 24/7 access via our YouTube channel, live presentations every Monday and Wednesday will be absolutely exactly what you all need to make sure you are able to really move forward with your Forex stat business. So with that said, with no further ado, it is my honor and my privilege this evening to introduce to you the architect of the Forex stat. I've had the privilege of working with him for almost a full year now, and I will tell you, we have certainly grown a tremendous mutual respect for each other. He knows what he is doing when it comes to the Forex world. There is no one better. And again, tonight, you've heard enough of me, so let me turn the webinar platform over to Mr. Joseph Nemeth. 1 second, please, as we go ahead and take that away. Joseph, are you here with us?
Hi, Bobby and everyone. Yes, I am. Can you hear me well?
Hear you loud and clear, sir. I just moved the platform over to you so we can see your webinar screen. If you'll just go ahead and accept that. There we go. We see you perfectly. And with that said, Mr. Nemeth, please take it away.
Alrighty. Basically, what we want to do is what we did last week. I think we decided that on Wednesday we will have an hour or 45 minutes or so, and we will dive really into the mechanics of the software. There's a lot of people that really want to understand it better, and the simulation of the data and of the trading, I think will help everybody to do that. So without further ado, what I want to do is go ahead and bring your attention to my screen. If you see this the main window or the dashboard with the lion hand in the upper left hand corner, that looks exactly like the main main window of the software with just one additional module. It's called the simulator. I have it opened over here, and I also have some data already queued up so that we can jump into trading. What the purpose of the simulator is to really demonstrate and illustrate how the software opens trades, how it manages those trades, and how it closes the trades, how it targets the profits that we designate or specify at the beginning of trades, and basically how it repeats these cycles over and over and over and over until you decide that you no longer want to trade, and then basically you stop it. So what I'm going to do, I'm going to open several windows here, and I'll make comments as I do that. First of all, I'll open the harvester window, and I'll take the simulator to my other screen for now, so it doesn't confuse us. So what we have in the harvester is the harvester is basically the engine of the software. The harvester, the bottom part of the harvester down here in this window, is populated by the various different mathematical algorithms that actually cause the software to open trades. And the algorithms are, to a degree, very simple. It's just pluses and minuses, and you add up the pluses, subtract the minuses, and you get the results. And when the conditions that have been prescribed to each and every algorithm, to each and every harvester, as we call it, when the conditions are there, then the software will or the conditions are present, the software will open trades, and then it will manage those trades. And what we have in this strategy, I call it a hybrid strategy, because it really is a combination of a trending strategy as well as a range-bound strategy. So we should be getting pretty good results with this. And I developed this strategy fairly recently. This was based on the lack of volatility in the market that we had for the last 3-4 months or so. Now we have seen in the last 2 weeks the market is starting to move a little bit. There's a lot of folks that are getting the monkey off their back, if you will, with the close all deals functions taking place. In fact, several people had sent me messages that they had their close all deals, and this was probably the largest period where a lot of people were waiting for close all deals, and that was obviously due to the lack of volatility, and we discussed this several times already while when you had me on the call. And so anyway, I developed this strategy by trying to not outguess the market, but just go with the numbers. The strategy is also based on purely price action. There's no consideration whatsoever given to any technical indicators, any macroeconomic indicators or analysis. We don't care what the central banks do, because ultimately everything is reflected in the price of the market, and the market will reflect that. So anyway, we've got. Getting back to the strategy, we've got a strategy that consists of 20 harvesters. It is all on 1 pair pound-yen, because it's when it moves good. It's a good one to trade. One of my favorite, if not the favorite one. This is a strategy built on a $10,000 account. We have the data queued up here starting January 1st, and we will pretend it is January 1st, and we will pass the data as it happened in the market through the software, through the simulator, and we will see how the software would have been opening and closing trades and managing those trades and reaching the different profits. Now, Bobby, also, I'm sure that there will be folks that will have questions throughout this presentation. So if they want to write them to you, and you want to just pick the ones that you feel need to be addressed or should be addressed, or the first ones that come in. Then I'd be happy to answer those.
Excellent.
If I don't have a chance to answer all of them, maybe save them. We'll address those next week. So here we are with the harvester. We set up the strategy. It is a purely price action driven strategy based on certain price movement in the market. The harvesters will open trades. When the market reverses, the software will also reverse from long to short, or from short to long, depending on which direction the market is going. We also, each and every trade that will be open is protected with what we call our zone recovery trading strategy, and that's set up right in this window over here. It is a two-legged trade recovery based on a 150 pip wide zone, needing 150 pip move to close the bad trade. Zone recovery is not a strategy that we used to make money with. It is the defensive strategy when the market goes against us, and we have to be protected at all times. We don't use stop losses. Some people may want to do that. I recommend against them, but that's a topic of another discussion, I guess. So our strategy is ready. What we will do, we will open our closed deals window, and this is where all the trades that have been placed and closed will be placed, and we will see how much money we're making or losing down here at the summary bar at the bottom. Then we will also open the open deals window, and we'll put that up here. And the open deals window will list and will have all the trades that are currently open and are being managed by the software. As you notice, up in here in the upper right hand corner, we have CAD, total running, which is a function. This is the mother of all functions, the most superior function of all functions in the software, and that is our global profit target, because it is found in the global open deals window that lists absolutely each and every trade that the software opened. And we're going to be targeting 100 pips, which is 1% of the account. And every time we do that, the trading process will start again, and the software will open more trades, new trades, and then manage those as well. So we've got our open deals and closed deals window open. We'll be able to see in a time-lapse type situation how the software is working. So basically, we're looking at the mechanics of the software. Also, I'll open the working orders, and in this window, you will see all the orders that are pending. In other words, the ones that have not been open yet. When the software decides to cancel those orders, they will disappear from this window, and new orders will.
Joseph?
Yes.
Real quickly, a quick question from the field here. They would like to know what the profit target for this particular strategy is that you're working on.
Yeah, the profit target is 100 pips, or give or take 1% of the account size of the total account. So what the idea is that if we can reach the 1% at least once a week times 52 weeks, we've got 52% a year. Now, depending on how the market cooperates, or whether the market is volatile or not, we might have the close all deals more often, or we might not have it as often. But we cannot change that. We have to go with what the market gives us. So this is based on the profit cycle, or the profit target is 100 pips, which is approximately 1% of the account, and we'll be adding that 1% with every closed trading sequence.
Thank you so much, Joseph. Thank you.
All right, so everybody's ready. We'll bring over here the simulator, and the simulator will actually show 4 lines that will be coming across this gray box over here. And I will be making comments as the market runs. I will be making comments as to what happens. We'll have at the very bottom this line that already started. I have the data paused right now. This is the direction of the market. In other words, if the market goes down, this line will be going down. If the market's going up, it will show that the market is going up. Now, what you want to pay attention to is the current quote day and time. We're starting on January 1st, 2013, right at around right before midnight, and obviously there's not a whole lot of volatility on the first day of the year. Obviously, New Year's, and I apologize for this. I don't know why this jumps up. Okay, sorry. But as the market gets more volatility, we'll see this line go up and down pretty radically. Now on top, you will see three other squiggly lines: a green one, red one, and the blue one. And these are the actual equity curves of our profit. So we'll show how our profit grows, and when we go into a drawdown, how specifically the specifically the red line will be going below the zero line, etc. But I'll make comments when that happens. So let's just go ahead and start our trading.
Joseph, real quickly, there are no green or red lines. The only thing that we're seeing on your screen is blue.
Trust me, you will see them as soon as I start running.
Excellent, thank you.
All right, but the green line will be the summary of all closed deals. The red line will be the summary of all open deals. And guess what the blue line will be? That will be a summary of both lines put together. Okay, so it's basically your liquidation value of the account at any given moment if you wanted to close the open trades. Now, all we need to do is start the trading. Press start. Right here, all harvesters are running, and they are waiting for the market to move. So let's run the market. There we go. And I'll move the harvesters are running. We won't need that. We'll put this in here, and obviously you see the little bit of movement in the market over here. We've so far don't really have any closed deals on the Forex That's the way we look at the market. But what you notice that the harvesters have placed several orders, and these orders are pending execution. When the market reaches the price points at which they are expecting to be placed at, then the software, obviously, then the trades will be executed and a trade will be open. As you can tell over here in the on the left-hand side in the open deals window, we have trades that are being managed that have already been opened. We just experienced the first global close. Basically, with all the little trades. Now, understand we are trading a $10,000 account, but our base trade, our base position is 0.5 mini lots. So that's 5 micro lots. That's a $5,000 position. You probably need about $80 or so to open that trade in terms of margin. Now, we just had a global close all deals, meaning that the position that were opened reached a total aggregate profit of 100 pips, give or take. The close all deals is a market command, and depending on the broker, the volatility of the market, there might be a little bit of slippage here and there, but the bottom line, it's going to be pretty close. So what you see, so far we're 113 pips in profit in our closed deals. Right now we're about minus 49 pips in our open trades, and this is the next trading cycle. The software had placed a total of 14 trades. We see the summary of the long position and the short positions. We're currently net short about 0.9 minis, and the market is moving. You see over here the 3 lines, as I mentioned. You see the market went up a little bit, then down, then up quite a bit, then it was kind of flat and flat. So that's why right here the equity curve on both the open, closed, and the combined trades are kind of flat. Market is not doing a whole lot. We can speed it up a little bit, but in the beginning, I just want you to kind of get the feel for this. Now, over here on the very right-hand side, we have a total of maximum drawdown. The simulator will calculate from the highest position how much we went into a temporary loss at any given moment, and you will see that as the red line gets painted together with the blue line over here as well. We've got our current closed deals, which is 113. That corresponds with this number over here in the closed deals window. We have our float, which is the open positions, and those are right over here, and that number is the same as this number over here. It's just a little difficult to watch it both at the same time. And this is our summary, and this is our total lowest equity that we have achieved since the beginning of trading. So now what I will do, I will speed this up a little bit. I'll disable the drawing because then it will go a little faster, and you will see that the orders will be changed as the market moves here a little bit. Right here we have another close all deals. Because we were net short, the market went down, so we closed all deals. Now, next cycle, software opens trades. We have another close all deals, and as you see, the equity line, which is the most important one, is the green one and the blue one, are going up, meaning that we're making money. So far, we're about 327 pips to the good. In the open deals, we're right now 80 minus 37. This is changing very, very fast. We are also, notice, on the fourth day of trading. So far, we've gone through 4 days. So this you can see how this happens very, very, very quickly. Any questions? I'd be happy to answer at this time.
Joseph, we really have not had any questions come in. I think everyone is really grasping a better understanding, and certainly the visuals are just amazing, and it really does assist with the entire process. So you can go ahead and just continue moving forward at this time.
All right. So when you see down here that we had a little bit of a bigger drawdown, 747 pips. If I look at the lines here, the equity curve, we see that from about here to there to here, we were in a bit of a drawdown, and that is if you look below, look at the market, you can tell that the market was kind of choppy. It went first at the beginning of this cycle, the market was going up, then it went down, then it tried to go up again, but it was flat, then it was a little more flat, slightly going down, and then it went down, down, down until, and basically it doesn't matter where the market goes. We just need enough time. If the market moves, that's a good thing for us. Whether it moves up or down, it doesn't really matter. If it's flat, well, it's flat. You can't really push it or pull it. There's nothing you and I can do. But when the market moves, doesn't matter in which direction, the software will add to the position and the direction of the market. And then even if it is in the opposite position, if the market reverses without reaching close all deals, and as the market reverses, the software will be adding more positions in the more trades in the direction of the market. That's why if you notice in the working orders over here, there's a lot of trades to be filled, a lot of orders to be filled. However, if the market reverses, even these orders will be changed to accommodate the new accommodate for the new direction in the market, right? So let's just speed this up a little bit, and we're on the 10th day of January, 9 o'clock, 10 o'clock, 11, 12, 12 o'clock in the afternoon now. And we're about 150, I'm sorry, well, it's moving, but you guys can see it. Boom, close all deals again. We're up roughly about 579 pips. And boom, we had another one, 682 pips. Now this, I'm saying in the harvester here that this is a moderate strategy. Well, it's a moderate strategy for me. For beginners, this strategy is aggressive as hell. It is an extremely aggressive strategy, particularly if you don't know what you might be getting into. It is recommended that when you first start, you start with a conservative, or at best, or at worst rather, whichever way you want to look at it, the conservative strategy. Don't get this aggressive, because this aggressive strategy can really get into drawdowns that might panic you a little bit. And so far, the only people lose with the software that don't have the patience and hang on till the end of the trading sequence, as we are seeing currently with the flat market that we've experienced over the last few months. Some people just don't have the patience. Yes.
Oh, I was going to say we do have a couple of questions, but finish your thought, please.
All right. Well, some people just don't have the patience, and trading is not for people that are not patient. It is a long-term process. The most successful investors have accumulated wealth not overnight, but over a period of years, if not decades, of consistent successful trading and investing, and that's what we're after. So
okay.
let's finish drawing the equity curve. So as you can tell, we're looking at a fairly choppy market. But at the end of the trading cycle, the software always accomplishes what it set out to accomplish, and that is to close on this profit that we designate at the beginning of the setup. And we've got times of drawdowns, and you can see that with these valleys of both on the blue line, which is our combined equity curve, and also the red line, which is the open deals equity curve. So we had some drawdowns, but at the end of each cycle, as you can tell, the software closes, and that's where the money comes back home. Okay, so that's what I wanted to mention. All right, Bobby, shoot.
Okay, Joseph, I'm sorry I had you on mute because I'm trying to type and answer as many questions as I can that are not necessarily things that are pertinent to what we're talking about right now. So just a simple question, Joseph, but very important is, what defines moderate, aggressive, or conservative strategies?
Moderate, conservative, or aggressive is determined on what the maximum drawdown expectancy is on that strategy. And the expectancy of a drawdown is defined by a variable that we call a trade interval. As you can tell, when we start a trading sequence, we start with one trade, and even I could slow this. I could really slow this down, and you could see the one trade and then the next trade and so on. So the bottom line is, the more aggressive a strategy, the more trades will be placed. But the more trades you place, the greater the possibility that those trades will or can go against you. And the more trades go against you, the more trade recovery you have to go into, and therefore you're going to be using a whole lot more margin, as well as the possibility of a drawdown will be increased. Now, on the positive side, when the market cooperates, you are more likely to achieve close all deals or profit targets lot quicker, because if the market runs in one direction, and these FX markets do have a tendency to trend. When the market trends, then the software adds on to the position in the direction of the prevailing trend, so it reaches the profit market faster. However, in choppy markets, that could be that could be somewhat risky.
Excellent explanation, Joseph. Thank you very much. Let's see. Thank you, Stephen, for asking that question, by the way. Mr. Nemeth, are you planning on adding more currency pairs to the hybrid strategy? And can we change which pairs to trade with ourselves within this strategy?
Well, that was two questions.
It was, so I'm just throwing them both out there.
All right. The strategy can be applied to any pair, of course. However, one has to be mindful of the volatility of the pair. So, in other words, euro-dollar, if the euro-dollar moves an average of 45 to 50 pips, as it has been lately on a daily basis, I would not even think about trading it, because it doesn't move. If it doesn't move, there's no potential to make money, right? So I look for pairs that have the highest volatility. Now, some people will say, well, that's so terrible because it can go against you. Yeah, it can go against me, sure, but I have mechanics in place that will prevent me from a catastrophic event, number one, and number two, I trade in both directions. I don't really care if it goes against the original trade. As you can tell in the open deals window, we've got 10 trades that are long and almost 20 trades that are short, and these are little tiny trades. So we go into the market just kind of one toe at a time. We start with one trade, and then depending on what the market does, we add to it or we subtract to it, and basically we create these trading sequences that are mathematical, nothing more than really mathematical algorithms trying to combine the profits and the losses from the various directions, from various trades in various directions, until we finally get our aggregate profit. And really, for a human to do this manually, it would be quite impossible.
Excellent.
Now, so any pairs can be used. Can an individual change from a pair to pair? Was that the
that was
the
the second half of the question? Yes, Joseph, correct.
Well, you can add to a pair already trading. You can add to that strategy, but again, what you have to be mindful of is your capital in your account. If you're going to add another strategy with another pair doing the same thing, then you should probably add more capital to your account, or wait until the existing trading sequence is closed. Then stop trading altogether and request for a new strategy or a different pair. But you know what I do, I test the various strategies before they go out there, and I would only feel comfortable giving people an opportunity to trade with those pairs and those strategies that I know work.
Excellent, excellent. Thank you so much, Joseph, and thank you for asking that question. Joseph, this is a great question. I think people have. The question is, I've heard Joseph use the word global close and close all deals. Are they the same thing?
They are, yes, and not necessarily. There are different ways to close a trade. There's probably about 8. In this strategy, about 8 different variations of closing a trade. But when we're referring to close all deals, global close all deals, that means that all trades that are open, all trades, every single one is closed, and we start with a clean slate from basically square one all over again. Now that's global close, CAD global, close all deals global. There could be other close all deals that are not necessarily global. For example, each and every harvester and now I'm bringing the harvester window back here. Each and every harvester assigns trades to what we call an open deals window. An open deals window, if you can imagine a filing cabinet with a bunch of drawers, right? So, and we have, imagine a filing cabinet with 10 drawers, and you can place trades in each one of those drawers, and they are numbered from 1 to 10. So, for example, as you can tell, this strategy is placing trades in open deals window number 1. This harvester does the same thing. It just so happens that all of these trades go into open deals window number 1, and I will show you what that open deals window number 1 looks like. Open deals window, it's over here. I brought it over. So you have open deals window number 1 up here in the upper left-hand corner, and you see the trades that have populated this open deals window. And this open deals window also has a close all deals. But if you have trades in other open deals windows, for example, number 2, 3, 4, etc., and this CAD close all deals function kicks in, it will not be a global close all deals. It will only apply to the specific individual open deals window. And generally speaking, there is a very strong relationship between the trades that are located in one window or another.
Well, we were thinking that was going to be a quick, easy answer, Joseph. But that was a phenomenal explanation. Thank you so much. I learned a lot on that, actually, myself. Joseph, here's another, I think, very important question. There's a gentleman, John here, is asking, he has a strategy running right now, and he wants to know when is the best time for him to close that and then to start running a new strategy. Is there a specific time that works better than others?
When the close all deals function kicks in and closes his deals, and he starts with a clean slate, because you don't really want to compete with an existing trading sequencing.
Okay, very good. And is there how does he go about making sure that that happens? Because he might not be awake when there's a close all deals. What would the process be with customer service?
Well, he would just send a short email saying, "This is who I am. I would like to change from strategy to strategy. Please make it happen," and we will make it happen.
So what happens is he sends this email to customer support, and the account monitors, when a close all deal happens, will disconnect his account, and then at that point we'll put the new strategy up.
It will not disconnect his account. We cannot disconnect his account. It's his account. But what the strategy will do, we will trigger a function, an event that will stop trading, stop opening new trades, and stop starting new trading sequences when that function is in. So we will just add that one event in, and it will, upon the next close all deals, it will stop trading, at which time it will give us an opportunity to update a strategy, or to replace it, or to add to it, or do whatever needs to be done.
Okay, let's see. Can a basket of currencies, like all of the majors, be traded at the same time to accumulate a global close?
Yes, they can. I do not advise it. The people who do that lose money. And I know that's fairly sophisticated. I don't mean any disrespect, but there's a lot of experts out there on CNBC that make recommendations to do this and do that, and every time you start talking about baskets of currencies, the person just simply doesn't know what they're talking about. They're confused.
Okay.
Now, when it comes to equities, you want to have a basket of equities. That's a completely different ballgame altogether. You do not invest in foreign currencies. You do not have a basket of currencies. you might be hedging one currency against another currency, but you don't really make a whole lot of money with that. Anybody that is looking at FX is not looking to invest in currencies. He's looking or she's looking to trade the spot markets and speculate on the short-term movements. That's what we do. That's how you make money in FX, in Forex or Forex trading. Forex trading. Remember, we call it Forex trading. We don't call it Forex investing. Anybody who's talking about baskets is trying to employ or bring over terminology or philosophy from equities, and that just doesn't apply here at all.
Mm-hmm. Very good.
Just false, wrong, erroneous philosophy altogether.
Joseph, again, thank you. That was a great answer. Next question. Right now, for someone who is just getting started with us and really they're not a trader but they really want to jump in, is there a specific strategy that the company is recommending for them to use over any other strategy, or is there just a specific for the newbies that are joining? How is that working right now?
Well, we recommend, based on the current market conditions that we've experienced, we recommend this type of a strategy, this type of a price action driven hybrid strategy that deals both with trending markets and flat markets. Let's go back and look at our equity curve, okay?
Joseph, what account is this? The hybrid account that we're looking at right now, or is this account number 2?
This is the hybrid on steroids.
Excellent, thank you.
All right.
On steroids, very good.
Right, because it can draw down. So anyway, if you look at the equity curve, every time you see this valley down here, this valley, this one, these are all drawdowns. And when the market finally gives us the opportunity to close all trades, that's when the blue line meets with the green line, right? That's basically, this is to close all deals here. There were a few close all deals over here, close all deals over here, then close all deals over here, close all deals here, and so on. So these valleys can be deeper the more aggressive the strategy is, right? So if you compare it to the market, okay, right here the market was kind of going up, down a little bit. We were closing trades. Then the market got a little choppy over here. Then it went in one direction until we were able to roll over to the other side. We were in a drawdown, but then we finally did roll over to the other side, and mathematically we won the battle here. So we closed all deals right here. Then the market started kind of going down at first and then going up, and there's some peaks and valleys here a little bit if you look closer, and then the market starts going up. Well, that gives us the opportunity to again change from the short position to the long position, go along with the market, and we close all deals again. And then we had a little bit of a choppy situation over here. That's where we had the biggest drawdown, which was 1,112 pips. That's right. That's right here. That was this situation over here. Then we had a bit of a drawdown over here because we started the sequence with the market going up. Then it was flat on top. Then it reversed on us. Then it was kind of flat in this area over here. So you see we're just kind of jumping around trying to figure out what the market is gonna do, but we don't have a crystal ball, right? So we only have to go with the market. But the bottom line at the end of each trading sequence, we will close the sequence with the profit. And it doesn't matter whether the market's going down over here, we close. The market's going up, we close. The market wants to fake us out, and we might be in a drawdown, but we work with mathematics, the purest science known to man. We don't pay any attention to the BS indicators out there and the macroeconomic indicators or experts on CNBC who don't know don't know any more than the biggest novice that comes to and it picks up a copy of Forex that and wants to trade and doesn't even know what they're looking at.
Mm-hmm. And the hybrid account, Joseph, again, is account number 8, correct?
Well, 8 is a range bound. The hybrid is a combination of 5 and 8.
Okay, very good, very good. Joseph, here's another question that I think everyone will get some benefit from. There's a few people that haven't had global closes in a couple of months here, and apparently on a webinar with Craig this past week, there was something mentioned that you were going through the accounts to determine whether to add a second strategy to expedite a global close. Is that true? And if so, how's that going?
Well, it's going well. Anybody that would want us to take a closer look at their that account and make a determination whether that's necessary or not, send an email to support, and the support will take it from there. But please identify yourself, who you are, because we obviously need to know which license it is that we will be adjusting.
Excellent. Joseph, with that, I think we're going to just go ahead and let you go ahead and finish up here. I think we've pretty much answered the questions that have come into this point in time.
Alrighty, so we're going to speed this up here. As you can tell, we're right here on the 28th day of January, still trading. We've got some open trades, about 460, about 500 pips now in a drawdown, and hopefully we'll be able to trade out of this just like we trade out of pretty much everything else. I'll speed this up. We've got the sequence. We're in the middle of a sequence. These are pending orders, open trades, closed trades. Let's see what happens, how this is going to break out. There we go. And with that, I'll pause it, and this should pretty much give everybody at least a bit of an idea of the mechanics and the inner workings of the software. Basically, once it goes, it goes, and it really only uses mathematics and pluses and minuses. It doesn't pay attention to anything else. It is pretty sophisticated though, because if you were trying to do this manually, it's quite almost impossible. I guess anything is possible, but for an individual to manage at any given time 50 trades that the software can be managing, it would be overwhelming. So let the software do it. Just plug it in, walk away, come back, look at it a week later or 2 weeks later, and hopefully you'll be happy with what you see. And I guess if you have any more questions, I'd be happy to answer them. I don't know how much time we've got left, maybe 5-10 minutes, but
actually,
this would conclude my demonstration, and hopefully I was able to clear some of the fog that is on the minds of a few people, especially the new folks coming in.
Absolutely, Joseph. This was a wonderful presentation this evening. I know the more we do this, the smoother it's going to get, and you certainly have done this a couple times, and it's getting smoother every time, and certainly the explanations are just exquisite, and I know that it has helped everyone that is on this webinar tonight. So thank you for taking your time to be here, and we know how valuable your time is. So we can't thank you from the field standpoint enough for taking time to be here. There are no additional questions at this time. I do want to just again thank everyone for taking time to be here with us. This webinar will be held every Wednesday. Now, as your understanding becomes more clear, your marketing efforts will become easier as we move forward. Please make sure that you join us every Monday night as we go over Forex as an opportunity and what that can mean to someone to assist us not only in utilizing the software to go out and allow the software to generate income for them, but to educate them on assisting us in the branding so they can earn additional income to actually put into their trading accounts, and watch what happens to the rule of 72 when that happens, ladies and gentlemen. That's when you will see some exponential growth like you could have possibly never expected. So with that said, I look forward to seeing you this next Monday evening with guests on the Forex Business Opportunity presentation, and certainly back next Wednesday for another version of the architect of the Forex Mr. Joseph Nemeth. Thank you all so much again. God bless and good fortune. This webinar is officially over.
Thank you, Bobby. Good night.
Thanks, Joseph.
All right. Good night, everyone.